So hello everyone, welcome to the special session of World FinTech Festival 2021. I'm Makoto Shibata from FINOLAB, moderator of this session. And it is my great honor to have Mr. Jouk Pleiter, CEO and founder of Backbase, as our guest speaker today. Mr. Pleiter founded Backbase in 2003, and ever since, the company is on a mission to transform the broken banking system. So financial institutions don't just interact, they engage with the people they serve. That's made possible with the Backbase engagement banking platform, powering all lines of business on a single platform, including retail, small, medium enterprises, corporate, and wealth management. From digital sales to everyday banking, the platform entire design focuses on a seamless and captivating experience for both customers and employees. Before founding Backbase, Mr. Pleiter was president and co-founder of Tridium, one of the world's leading web content management software vendors, later acquired by SDL and renamed SDL Tridium. Before Tridium, Mr. Pleiter co-founded PrintSpark Consultancy, one of the first interactive web agency in the Netherlands. So welcome, Mr. Pleiter. Did I miss anything that I should mention?
Thank you, Mr. Makoto-san, for the introduction. I think you have been very complete. It's an honor to be here.
Right. So since you've been in this industry for many years and the Backbase has entered this financial service well before we started to talk about FinTech, I think today we would like to have your observation on the changes of banking industry and insight for the future of financial services. And of course, how Backbase would position itself with these changes in the business. So I would like to start from API or open banking. I guess many banks are now aware of the importance of API connection and opening up their banking initiatives. How do you see the changes happening, and especially in your experience in the market that Backbase is active, how do you see the changes moving on?
Yeah, I think APIs are mostly an enabler, right? So they help you to kind of unlock. I think one of the bigger problems is that there's a lot of data in legacy systems, right? So the APIs will open up these legacy systems to the engagement layer. So I think that's super important, because otherwise we cannot really kind of create seamless customer journeys, right? Then the second part is that with open APIs, we can incorporate data from other banks via open banking into the engagement at all. So I think the APIs and the data are basically the fuel to create seamless customer experience. So that's also where a company like Backbase comes in. It's the engagement layer. It helps you to kind of streamline customer journeys. But in order to do that, you need to connect to your existing system. So you need to kind of connect to the core banking system, to the local payment rails, and APIs are crucial for that, right? The second part is that you now see more and more fintechs that provide best of breed capabilities, for instance, for loyalty or to access data from other banks. And you can now also kind of incorporate that into the engagement layer. So I think in the end of the day, it's all going to be about value orchestration. You have your systems of record, you've got your systems of processing, and then you've got your engagement layer. And in the engagement layer, you can actually accumulate and orchestrate data and functionality from all these different sources, from your legacy systems, but also from the open banking landscape and from fintechs. And now you can orchestrate all that data and that functionality, and you can apply it into a meaningful customer journey. And this is not unique. I think this has already happened at scale in other industries, right? So, and that's called digital disruption. We've seen it in the media industry. We've seen it in entertainment. We've seen it in retail and e-commerce. And right now you see this massive disruption around the globe, where this kind of platform play and who owns the engagement layer and who is doing the actual value orchestration. It's a major battle, and I think there's going to be a dramatic shift in market share between the incumbents. The incumbent traditional models typically lose market share, and the upcoming platform players that actually do the data aggregation and they have a platform play and they utilize these API capabilities, they gain market share. So in that sense, I think it's really a revolution that is happening in different parts of the world in a different pace, but it's going to happen everywhere. And I think the incumbent financial institutions have to be ready to basically make a decision. Either it's going to happen and you're not participating, or you're going to make the shift and you're going to get yourself ahead of the curve and you'll switch your operating model to a platform model.
Right. Yeah, I guess the legacy system is something that the incumbents are struggling to have better connection with the front end system, or your, as you described, the engagement layer. And I think one of the recent approach for someone who's coming into the financial industry is to provide the banking as a service, or BaaS type of service. And do you see that these approach would dramatically change the way the financial service offering would change?
Yeah, so most traditional banks are now fully aware that they are being disrupted and they need to make the change. So let's first go to the fundamental problem. You know, you have an install base of customers, and unfortunately, in quite a few cases, these customers, from a customer satisfaction point of view, especially what they can do online or mobile, they're not very happy. So there's this risk that people will switch, right? So that's the question is then, okay, how are we going to transform the bank? And so what is our digital transformation program? And I think there's typically a couple of options. One is that you refactor your traditional technology stack and your own culture. So you really need to change the mothership. Or in parallel, you can go with something what people now refer to as a greenfield operation. And I think especially banking as a service can play a role there, where you say, I'm not going to completely re-architect my traditional legacy infrastructure, which is basically 40 to 50 years of technologies, all kind of clutched together. Mm-hmm. You go for a clean start. So in my mind, banking as a service is an opportunity, which is also where you basically take a state-of-the-art modern platform approach for the engagement layer, including the fintechs that can fuel it from a fulfillment perspective. Typically also often a lean core as the system of record, and all of that is instantly available in the cloud. So that is an approach that can help traditional banks to basically build a speedboat on the side. And it's also a model that will enable non-banks to provide financial services, right? So I think banking as a service is a huge movement, and it's an opportunity both for traditional banks as well as for other industries that want to consider to take finance or banking-like products like cards, payments. It's kind of embedded finance where you make sure that these banking capabilities are going to run as part of your non-banking customer journey. Does that make sense, Makoto-san?
Right. Yeah, I guess there are several options, and especially for someone who's in this business for a long period of time, you have to look at your system infrastructure and reconsider how they can change your offerings, not just the fundamental legacy system, but also how you serve your customer. I mean, not just adding the API layer or adopting a new switch is not sufficient.
No.
You have to have a good understanding of what customers are in need, and also what are the application or customer experience that you can improve. And I think many large financial institutions started to recognize that importance, but it's not very easy to make move in short period of time. And maybe I can move on to another topic. Since we've covered A and B, maybe we can move on to C, which is cloud computing. I think many banks started to use cloud computing, and even for core banking element, we've noticed that JP Morgan Chase has recently adopted a plan to move their core banking system to a cloud-based application. And do you think that cloud computing would dramatically change the way banks construct their service, and how the Backbase can position yourself in this infrastructure?
Yeah, now I think just like with APIs, also cloud computing is just an enabler, right? So I think it's important maybe also to go back to the larger strategic picture, and that is that in the end of the day, there's, from an executive point of view, if you are a senior banking executive, you've got a couple of very strategic questions. One, how are you going to defend your position in the engagement layer? Do you really want to own the engagement layer or not, right? If you are not owning the engagement layer, over time, you will lose the contact with end customers directly, right? You basically become an invisible financial services factory, and someone else, a big tech, a FinTech, a marketplace, will own the primary relationship with the customer. So I think in the end of the day, the most strategic question is, do you own the engagement layer? If you take a 10-year perspective on the future of the financial institution. Then the second element is like, what is your cost to serve, right? What is the cost income ratio of the bank? And there you see that the traditional processes, but also the legacy IT systems, they've been accumulating over, let's say, 50 years of technologies, and you're adding more and more technology and more process to the bank. So basically, fundamentally, the operating cost and the operating model of a traditional bank compared to a new entrant platform player is just simply way too high. And therefore, you need to kind of change that. So I think the strategic perspective there is own the experience layer, the engagement layer, and then secondly, how are we going to reduce our cost income ratio? And there, in order to do that, both banking as a service as well as a cloud-based delivery model are great enablers, because you can benefit. You don't have to have your own data centers. You don't have to have that 50 years of legacy and all the thousands of people that need to maintain those technologies. You can gradually make the switch to an operating model where you can actually leverage economies of scale. And economies of scale, I think that's exactly what the cloud technology providers, but also solution providers like Backbase will provide. They basically give you your future state platform operating model at a fraction of the cost if you compare that to your traditional operating model. Of course, there's tactical discussions, can we go to the cloud? Can we use public cloud technology? But I see a global trend that everywhere in different parts of the world, people eventually will just arrive at economies of scale by leveraging public cloud technologies, because they are highly secure. And the amount of investment that is made in these infrastructures from a security point of view, from a performance, from a compliancy point of view, typically is many times larger than an individual bank can do on their own. So in my mind, it's not just a tactical discussion about open banking or cloud computing. In my mind, this is a very fundamental, existential question about what is the future of financial services, and how do we make sure that the incumbent banking operating model, and that's probably a little bit biased, but I think it's not fit for purpose to compete in a platform era. So therefore, it's really disruptive. And quite a few banks, they know they need to go, but they are still concerned about, how to make the change. And I think I understand that. So we would like to carefully guide banks and banking executives in that journey on how they can change their operating model. But it's quite fundamental. It's not a tactical maneuver. I think it's really about the future of how do you protect your market share and how do you stay competitive for the next 10 years.
Right. So I guess in addition to the point that you mentioned, the scale of economy, I think speed is a very important element. I guess many players coming into the financial service would have very swift move, applying their cloud computing or API-based application and competing with the existing players stuck with the legacy system. And do you think that that's another element that incumbents may have problem disrupted in this competition?
Yes, absolutely. I think that's, in my mind, that is spot on, because that's exactly what I hear from so many banking executives around the world. They say, in essence, we are competing for speed, right? But then also the question is, it's a mix of how do you become more agile, right? So there's elements like cloud computing, there's third-party fintech providers that can help out, but there's also a very fundamental internal set of aspects like leadership, risk appetite, conviction about that this is a disruptive move and we need to change now and we need to take the bull by the horns. It's also about kind of creating a more agile internal way of working. So I would say do not underestimate the cultural aspect that is required. So I also see a lot of banking senior leaders that they realize this and they basically are hiring people from outside of the banking industry, from telco, from high tech, to kind of create a different blend in their internal leadership DNA and also to bring in more agile ways of working. Because some of these concepts, I would say, are quite foreign to the way traditional incumbent banks have been working. So I would respectfully also recommend executives in the banking industry about there's all these enablers, but it's also about culture and internal operating model to make a decisive move. I don't want to sound too negative, but there are other parts of industries that have been disruptive, like for instance, BlackBerry and Nokia with the iPhone. Where you could argue that the feature set of these phones were the same, right? But still, of course, the iPhone won the battle. So it is important that we don't take the luxury of the incumbent business model with all the profit is generating and confusing that with the fact that model can operate for another 20 years. We've seen enough examples of disruption in other industries that I think we are discussing a very serious threat here that will slowly materialize. And last remark about this, I've seen banks starting to kind of get real urgency when it's slightly too late, because then, the challenger players are already, they have their head start and they are super aggressive and you basically then as a bank, you start, they have the head start and you're behind. So I think a careful assessment about the urgency of the situation and the decisiveness on how you want to act. The decisions of today will impact the success for over 5 years. Your P&L impact 5 years down the road will be decided about what you're doing today.
Right. Now, I guess I would like to turn to another keyword, digital transformation. And I guess many financial institutions started to become aware of disruption coming from different angle. And I think many leaders started to focus on digital transformation. And I think it has some technical element and cultural element. And can you tell us what you have been seeing with your clients or your potential clients, how banking institution has been coping with the digital transformation?
Yeah, so digital transformation is partly the cultural element and the leadership element and the agile way of working. And I really think that's the responsibility of the bank. There's only one, the bank can control that. The other part is about the underlying enablement technologies to go into kind of a platform operating model. And I think that's where companies like Backbase, we create strategic partnerships with leading banks around the world, where it's basically say, it took Backbase, for instance, more than a decade to build a leading engagement layer platform, and still we're far from finished, right? And we have around 1,500 people just full-time focusing on that, and that number will probably double in the next 2 years. So with that, you can basically get serious acceleration for your digital transformation. You don't have to reinvent the wheel completely. You can really go now and say, I think that's the great thing. You've seen it in e-commerce as an example, where companies like Shopify basically went to market with an e-commerce platform play, and they basically say you can now, if you partner with Shopify, you can compete with Amazon, right? And from small to large retailers, we can give you that instant, fully industrialized e-commerce stack, right? Backbase is doing something similar for banking as a service and for engagement banking. It basically says all the different building blocks from security to audit, to engagements, to campaign, cross and upsell, customer onboarding, all those journeys are already available on a very powerful engagement orchestration platform. And that in itself, if you combine that, then you can say, as a bank, you have the brand, you have the install base, you need to make that transformation. This is the platform where if we partner, you can really jumpstart that transformation. If you have to build that on your own, it's going to take a decade. Right? If you can so either build it yourself, you can go to your traditional incumbent providers and basically ask them, like, what's your roadmap? Where are you? Are you going to be the reliable partner to drive us? Or there's the opportunity to go with companies like Backbase. But I think in that sense, we really see that competing for speed, but also taking a head start to really jumpstart that digital transformation, I think that's definitely a possibility. The part that then is remaining is how do you organize that yourself as a bank, right? Are you going to gradually transform all your customer journeys? Are you going to go with a greenfield approach? So there are different playbooks where the leadership of the bank can basically choose, and you can also hedge your bets a little bit. We see some banks that they transform the mothership, but also they do 1 or 2 speedboats on the side. But that's all about your strategic portfolio management on how you want to navigate through this transformation.
Right. Okay, and maybe I can move on to one of your favorite topic, engagement. And I guess many bankers try to emphasize the importance of engagement these days, but it's a bit ambiguous concept. And maybe if you can explain a little bit about how your platform would enhance engagement with the customer.
Yeah, so I agree with you. That's a little bit ambiguous, right? So there's a lot of talk about engagement or superior customer experience, and it's if you are not careful, sometimes it's just lip service, but you fundamentally are not solving anything, right? So maybe it's good to go back to the original heritage of what successful platforms have in common. So if you look at transportation like Grab or Uber, in transportation or meal delivery, or if you look at Netflix or all these major Rakuten, if you look at e-commerce, what they have in common is that they are basically genuinely looking to remove friction. They refine this as kind of, let's make a 10 times better customer experience. in order to do that, they analyze like what would it take to kind of take transportation with a taxi, and these guys kind of transform that very cumbersome process into you push one button and there's a car. You push another button and the food is in your home, right? So they use platform technologies to kind of create a 10x better experience. And in that experience, in that customer journey, there is zero friction. So in my mind, if you're really serious about customer experience, it's not kind of the innovation labs or the marketing talk or the advertisement on television. It's about a genuine commit to understand every important customer journey you have and analyze it almost like with a stopwatch. How much time does it take to execute something and what can go wrong? So it's kind of almost like this Apple style focus on shaving off every part of the friction and making it beautifully simple. In my mind, that's craftsmanship, right? The craft person caring about removing the friction. And ironically in banking, because I don't know why, but there is so much friction in all these journeys. And for so many years, there was no alternative for the customer. So you basically had to live up with it, right? But today you are living in a world that the end consumer, the small business owner, they will not continue to accept that subpar experience, or they will not continue to accept that friction, right? And the party that will remove the friction and will make these things easy, I think is going to win. And there always has been an excuse in banks like we don't need to do it because we don't care, or we cannot do this from a compliance reason. But I think those days are most likely over because the end customer, both retail, consumer, and business, eventually they will vote. And I think it is very clear that they will vote for convenience. So an engagement platform is all about optimizing these customer journeys. And of course, to do that, you need a platform. That's where Backbase plays, but it's foremostly about removing friction and making things 10 times easier. If you do that, your customer base will stay with you, and you can basically prolong your business model for endless into the future. If you do not make the change, the customers will vote and they will go for convenience.
Right. Yeah, I think we can move on. And since the time is limited, I guess we can't go on to reach Zed, but I think here we would like to have your final advice to people in the financial industry, how they can cope with the radical changes that technology is changing, the customer behavior is changing, all the environment is changing, the new players coming in. If you could give one piece of advice, that would be appreciated.
Yeah, I think it's not too late. I think also, especially in the Japanese context, I think it's a virtue to be patient, and it's a virtue to make careful decisions. What I see in front of us is that the change will happen in a certain pace. It's now about making these more complex, daunting journeys of transformation, taking decisive leadership about, do you want to transform? Is there a genuine, deep commitment to do it, and an understanding of the why? Then the second part is that how do you kind of assemble the right team, including fintech partnerships, to make that transformation? And then I think it's okay to change maybe a little bit of the risk profile, because that's what you see in tech companies. There's a higher appetite for failure, and failure is not a negative thing. Failure is basically a learning exercise where the market is teaching you that it's not working and you can do something else. So sometimes culturally that is difficult, but I think it's okay to make calculated little steps in that journey together with the right partnership, building trust, building early success, and then building confidence. And from that confidence, you can become a very powerful force of transformation. I'm very proud of all the banks. We work with around 150 banks around the world, from mid-sized regional banks to very large banks. And I'm very proud of the progress they're making. So we've seen so many examples that incumbents can transform themselves, can take the lead, and innovate as fast as any big tech or fintech if you take the right strategic partnership and the right leadership.
Right. I guess many banks in Japan can learn from your experience. And I guess doing nothing at this time is the biggest risk. So I think many of us learned today that we should make a step forward to challenge for the future. Thank you very much. And I hope we all enjoy the conversation today. Thank you.
Thank you very much. It was an honor to be here.